Good morning, everyone. Um, Welcome to Rally Academy. This is a morning market review where we make daily profits. So what we do basically is to check the move of the market before it happens so we can maximize profitability. My name is Victor, and I'm going to be your host for this market review. We have just few persons currently on call, just few persons. So let's just exercise a little bit more patience for more persons to join the call, so we can have a much more robust session, right? Okay. Good morning, Mr. K. Morning. It's been a while. Yeah, been unavailable, but we'll resume back our sessions. So we are just, for those just joining in, welcome. We are trying to just exercise a little bit of patience to wait for more persons to join the call. That's all. A little bit more of patience. All right. Okay, I think we can start now. Good morning once again, everyone. And for those who just joined, welcome once again. And so we were just trying to wait for you actually. Now that you are here, we can actually kick off the review. Um, but you can hear my voice now, right? I wasn't talking before. I just started talking. So can you hear me, please? I need to confirm. Good morning, Mr. Carl. You're
Yes, you
welcome.
can hear. Good morning.
Oh, yeah, that's good. Good morning, sir. Okay, good. All right.
We can hear you. Good morning.
All right.
Good
Good
morning, sir.
morning.
We can hear you.
All right. Good morning. Thank you so much. Thank you.
Hear you very
All right.
clear.
Morning, we can hear.
Okay. Thank you so much. I appreciate it. So let's kick off the review. So I'll be a little bit fast today because I have another schedule. So this is GBP USD. Now, if you followed our market review, especially the ones that I do every Wednesday, you understand that my goal is for you to really understand how to look for entries. Now, it's not complicated, but to the best of my ability, I always try to simplify the process of analyzing your charts and coming to a particular conclusion on where and when to take a trade. Where and when to take a trade, right? Good. So you can look at the chart for yourself and you can analyze properly and decide if you are to buy, if you are to sell, or you are to hold on. Or specifically, you would know where to be buying from and also where to be selling from. All right. So it's just a break and retest. So it's a combination of top-down analysis, one. It's also a combination of market structure, two. And we just basically top-down analysis, market structure, breakout, right? Now, this is what we do. So if you want to understand where price is most likely going to, because I've come to realize that price doesn't just move at random. It's headed somewhere. It's headed somewhere, and for price to move to where it's going to, it needs something. It's just like you want to travel by road. You obviously you have a destination in mind, but for you to get to that destination, you need certain things, right? Okay. So, for instance, you need fuel in your car for you to get to where you are going to. So that fuel is what we call liquidity. Liquidity, uh, the ability to move. And in the market is money. So we have buyers and sellers in the market. For buyers to buy, they need to have money to do that transaction. And sellers have to be present for them to actually buy whatever those sellers are selling. And for you to sell, obviously you should have people willing to buy what you want to buy. And there should be money available for that transaction to take place. Okay. So now, if that's why one of the simplest way to understand uh, this process is that I always say that for price to go to the upside, if price wants to go up, or after seeing an impulsive move up, obviously you should first of all look left. The secret is not in front, the secret is behind. So that's why analysis. You are looking at what has happened before to draw inference on what is most likely going to happen in future. So after price makes an impulsive move to the upside, check before that impulsive move, was there a sell, right? Was there a sell? Now that is very, very important. There should be a sell, right? If there is no sell before that move takes off, that means this move is invalid. It's not useful. It's not useful. But if there's a sell, and guess what? The sell should be smaller than the buy. We shouldn't have it like this. The sell before the buy. It should be the sell should be smaller than the buy. Basically smaller. It can be like this. It can be as small as this. It doesn't matter. It has to be smaller than the buy. So let's say we have something like this, right? Good. So one of the first things you would want to do is the whole of this cell is an area where you can draw inference to wait for price coming back to take a trade. So usually after price makes an impulsive, there's always a retracement, right? So if the retracement can come into this level of that sell before the buy, anywhere around here, you can look for further buys again, either to come back to this point, this high that it created, and if we are bullish, we are in an uptrend, then most likely should break it to create a new high. Now, this is what we call the order flow, order block. Some people call it supply demand, right? It's good that way. Now, another way of doing this, it can be break and retest, which is you see this high that I created before from that sell, right? So you can have it like this. The moment price breaks above, you can wait for a retest into that level before you take a trade. The disadvantage of this is that sometimes price can go a little bit more inside before it goes out. Before it goes out. So to be safe, you should have this sizable account, right? To withstand whatever shock, whatever negative or drawdown you have before price goes to the upside, right? So this is just basically a summary of the concepts that we are looking at. Now, whichever one we are going to be using, either a breakout retest to this point here, depends on how price moves. So it's not a one-way thing. That's why it reminds me of what happens when we were in school, let's say as Nigerians, primary school. You know, in class, you'll be given homework, classwork. So let's say we are doing mathematics. The classwork can be like 5 plus 3, and there will be a box, equal to the box equal to 8, right? You can have like 4 plus 9, there will be a box equal to, so write 13. But when it gets to classwork, you then be seeing 23 plus 59. Instead of 1 figures, now you are seeing 2 figures. Now, when it gets to homework now, you start seeing 259 or 2 raised to power 2 plus so and so equal to. Now, it gets complicated. Now, the problem now is it is the same process you are to use to solve that problem. It just depends on how the problem comes. So one of the mistakes we make as traders is that you always think that your strategy is just that strategy. It's mechanical, but sometimes the mechanical aspect of it, which means if this happens, then this is what is going to happen. The mechanical aspect of it is subject to certain tweaking. It's a function of how price moves. So let's say, take for instance, because when we are done with this, you will just use this same uh, process on anything basically. So let's say we want to buy, right? We want to actually take a buy trade. So let's say in this, I'm not sure I'm seeing a perfect example. No, not this. Not this. Looking for where price actually gave a break and where price went back into before moving to the upside. I think let's just continue. We'll get it. All right. So let's start the analysis. So what we do is we look at all of these break retests from the higher time frame perspective. So this is GBP USD. If I go to my daily time frame, you'll clearly see that we are currently still bullish. Let me hide this. We are currently still bullish. Good morning, Mr. David. Good morning. So we are still bullish. Price is still headed to the upside. So let's see if our bullishness is still valid or structures have been broken. Now, which means that we are still looking for buys first, right? That's one. So how do you look for buy? Now, this is where you now mark your break and retest, which I think I've shown you a couple of times. So you look for a high that had a good retracement, then was eventually broken. So let's say this was a high, okay, a good retracement, or let's pick this high, a good retracement. This is daily time frame, good retracement, and was finally broken. So you mark from the whole of that high, and you extend it to the future like this. Now, this point here, I'm marking from the week, from this week here, right? That's why it's as extended. So this point here now is I need price to go and come back into these levels. Then when price comes back into this level, remember I will say top-down analysis from the higher time frame, then market structure, I need to see a shift in the market momentum. So for price to come to this level, you obviously see some selling momentum. But when it gets to this level here, you should see a change in direction, right? So let's say, let me mark that level so you see what exactly I mean from where it got to this point. So this should be around, May. Should be around May, right? So let me go back to my 1 hour time frame to look for entry. Oops. Okay. Okay, good. This was where I marked. Now, for price to come back into this level, this was where the breakout happened. This was where the breakout happened. If I came back to that level first, what's going on? Oh, okay. All right. So it went back to that particular level, and you can see this is the level one price to tap into, right? Finally, it tapped into this level. So for it to come to this level, it obviously will be doing some sales. So you can see that there was massive sell. Even before that, you see the massive sales, right? So after it gets into this level, I need to see a shift in momentum, which is you can see the last high it created before it dropped into this level. Price need to take it out for me to have confidence to start buying, right? It needs to take it out. So I can just mark this high, right? So you can see this high was taken out. So this is what I'm saying. When it was taken out, it came back here. If you are buying from here, notice that price went slightly inside before finally taking off to buy. So that is where it becomes subjective. Now, reason is because the movement from here to here, there's a massive distance. So price has even gone up massively already. So it needs to do some massive retracement also before a continuation. So if I'm just expecting to buy from here, the first time it happened, but the second time, notice it came inside, the third time it came inside before we actually have that serious buy momentum. Okay, so you can keep using this to buy. Now take note of a high that had good retracement, which is this again. So you can still use this as another entry level. So you just mark the high. Yeah, just okay. You mark the high now. Notice that when price broke out from here again, it came so I can have another buy, right? Now you can see these highs here again, although the retracements are not that massive, but I can still use it. So you see this high here again. So if you extend it to the future, notice after it was broken, it's a matter of time, it came back inside, so we can start having another buy again. Now, after this happens a couple of times, price doesn't just go one way. So you'll experience some massive retracement. This is strategy for another day. You can find it in Elliott wave. Price moves in waves. After making 1, 2, 3, 4, maximum of 5 highs, you will see some massive sales before price will continue going back to the upside. So it has made a couple of highs. So you see massive sales to clear some of those levels. It will confuse you looking like a downtrend before it keeps going again. So let's move to current market price now. Current market price. So what's happening at this level? So if I go to my daily, because I like to pick my level from my daily. All right. Okay, this is the last level we drew. So this is where we have been buying from. And price created another one here. Just look for a high that has some good retracement and was finally broken. So you mark the top of that level. You use that point as a point of interest for you to be trading from. All right. So on the 1 hour time frame, this is how it looks like. So what do you think should be happening to GBP USD right now. So GBP USD should be going bullish. And why do I think it should be going bullish? Is because we've had a shift in market momentum, even though it was created by fundamental. So you can see this massive sell that brought us into this level, and you can see this massive buy that took out this last high. This was the last high before this moved down. So here, it has been taken out. So some persons would have been buying from here. You'll see some drawdown first before going up. So in other words, irrespective of the drawdown, in the long run, we are still expecting price to push to the upside. All right. So GBP USD is a buy. At least it can buy up until this level right here. It might not get there today, but I expect a continuous buy from GBP USD. Continuous buy from GBP USD. All right. So that's one. Then Euro USD, Euro dollar. Most times they do almost the same thing. They are very similar, almost the same thing. So if I go to my daily time frame also, you'll see clearly also that we are bullish. We are to the upside. All right, we are very much bullish right here. So even though it has broken trend line, we are just having some significant retracement, right? That's one. So how do I look for my buy trade? Still on the daily time frame. So we've had this level. Oh no. You can see they look very similar. So we've had this level, which has been mitigated. Price has tapped into it already. Then the latest level is here, right? So you have this level right here, which was tapped into first, respected, came below, but still came above. So you'll see that on our 1 hour time frame, we are still very much bullish because after we have series of sell, 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 the last high that price created right here has been taken out. In fact, even this high too has been taken out. Right? So this move took them out. So you just see some massive retracement. Okay, so which means that we are still very much bullish. We expect it to keep going to the upside, and we should buy up until at least this levels, this last high, given our bullishness continues. So we are still very much bullish on the euro dollar also. Okay, whatever sell is just to retrace into a level we have marked to keep buying to the upside. What else? NZD USD. Let's see. NZD USD. Okay, from my daily time frame, let me now, unlike the GBP USD, the Euro USD that we'll check now, the NZD USD is actually currently okay after moving to the upside. Now it's showing signs of a downtrend because it has stalled and is beginning to push lower. And you can see that it got to this zone. We didn't see a change in momentum. Price came lower. So we are still expecting a continuous push to the downside. Why? You can see the overall trend. The trend here is a downward one. The trend that we are currently experiencing is a downward trend. All right. So price need to come into these levels. Okay. Price need to come into these levels. So if I'm to mark this area properly again, let me just limit it to what price is doing right now. Okay, so this is what we will have. Sorry, excuse me. This is what we will have, which means this particular low here, this high here rather, that was retested. So you can see that price came inside this particular level. Let me see. Just hold on. Let me make sure I'm in the right direction. Yeah, so we are still bearish. You can see we are still bearish. We are still very much bearish. Okay. So unlike we are following the particular trend. You know, for a bullish trend, we are looking at buying. So for a bearish trend, we are looking at selling. Okay. So, and especially when price breaks any previous level. So price needs, it has broken all of these levels right here. You can see this level here. So price needed to retrace up to continue selling. And this is how it looks like on the 1 hour. So after breaking, you can see the retracement to continue selling. So in the long run, we are still bearish on NZD USD. We are still very much bullish on NZD USD, right? So that's for NZD USD. Let's see what else. USD CAD. Okay, so this is my daily time frame, and you see that we have been pushing to the upside, but currently we've pushed to the downside. But it looks like price has changed momentum after this massive downward movement. Price looked to be changing momentum, so currently we are looking at being bullish now. Okay, you can see, and how do we do that? You can see all of these highs here that are broken. Price just needed to retrace into it to continue buying. So has it done that? Yes. After it was broken, okay, to the upside. After it was broken, excuse me. So after it was broken, retraced into it. It broke a bit, but continued. Now, so if we were to be in a downtrend, when price breaks here, there's a very high tendency to keep going down. It just retraces up to continue going down. But because we are bullish, if price breaks it, it might not continue that sell. It might be a fake out. Please note this. That's why we start from the higher time frame. The higher time frame gives us a perspective into where we are currently pushing into our destination. Remember, I told you from the onset that price is not moving at random. It's headed from one point to the other. Okay, so we know now that price is currently pushing to the upside from our daily time frame. So previously it was going downward, but now it has changed momentum and is pushing to the upside. All right, remember we're on a daily time frame. So here we are looking for buy opportunities, and for us to do that, we need price to break a previous high, retrace to continue, isn't it? So these are highs, this high, the same high, it has finally been broken. You can see it retested and it continued, right? Good. So that's why. Now, when it looked like it was breaking it at some point, why you shouldn't sell is because we are still bullish. It might be a fake out. It might be a fake out. All right? It might be a fake out. So, but if we were bearish, like the trend is downward and it breaks, then it will only retrace to continue selling further. So that's the difference. So you need to understand where you are, where price is coming from and where it's headed to. It gives you a good perspective. So not to talk too much, price is going to be bullish. Why is price going to be bullish and why should I be buying here is because remember, if you want to continue taking trades, you look at previous highs also that are broken. So you see this highs here. So let's say I've taken my buy already and I'm looking at where should I buy because it ought to keep buying until at least it gets to the last high, if not even break it. Okay, so now how do I keep buying? Because I can keep buying, buying, and buying. I can decide to leave it as a swing trade. So you can see these highs, retracement, retracement, retracement. Finally, it was broken. Notice it came back there and is respecting this level. So yes, we are buying USD CAD all the way again. Yeah. USD CHF. I think we said this one should be a sell from last week. Okay, we marked this level here that price took out. We're waiting for retracement. And the retracement has happened. You can see we should be bearish again. Now, why we are bearish? you can clearly see we are to the downside. So we are looking for sell opportunities, which means we want price to break a previous low. These are previous low. The low was broken here. So we need a retracement inside to keep selling. Okay. So if I go to my 1 hour time frame, you will see where the low was broken. This was where the low was broken, right? This was where it was broken. So we need a retracement into it. Okay, finally we got our retracement into it. Now, guess what? Why shouldn't it continue going to the upside? Because we are bearish. It went above the level we wanted. It doesn't mean that we can start buying because we are overall bearish. Like I said, these things happen. So these are some of the mistakes you make, and it can still take you out. You can have a stop loss, it will take out your stop loss. All right. So some people feel, oh, now that it has broken, we should start buying. You are not entirely wrong, but if you are looking at the larger picture, overall, it most likely is not going to happen that way. You can see, all right? So we are looking at sell, 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 and sell, right? So which means that this low, looking, okay, so for us to have an entry, we just repeat the same thing. Good. So if I take cognizance of this significant low, say, okay, I would like to sell from here. This is where I'll be wrong. Now, remember, I said there's what we call the order flow. Right. Okay. Biko Biz. Come in. Let's finish this one. All right. So here is where it becomes subjective. Remember, if the distance is much, you can see how massive this cell is. You need a good retracement inside before a continuous sell. So which means that I can't just be selling from here. It gave me a fake out but went inside. All right. So, but if the distance is short, if you remember from our GBP USD, you can see the distance here too is much to the upside. Hence, I can't be buying from here. It will go a little bit inside before pulling out. So the same thing is what we are seeing on USDCHF. Because of the massive sell, that retracement most likely is not going to be short. So you can see it went further inside before pulling out. So where can I attack it further inside? Remember I mentioned before a buy, there has to be a sell. And before a sell, there has to be a buy. And the buy, for instance, this sell, there has to be a buy. And that buy should be shorter than the sell. So if you mark the whole of that area, you see where the buy started from, right? If I mark the whole of it and I extend it, this is actually where I can have my good sell trades. So this is like your order block, your order flow, your supply demand area. If we want to be specific, we are going to be taking the last buy candle before the sell, which is here. All right. So, but the whole of this region is where that sell can actually happen, which you see, it just tapped into it and you can see selling, which means that if price for it to sell, it might come back into this level before selling, and I expect it to take out this low in the long run. Right, so we are still looking at being bearish on USD CHF. So let's go to silver. One instrument I also like, silver. So if you look at it from the higher perspective, which is exactly the same thing that we are doing, but at different levels. You can see where I was taking my trades earlier. This is on a daily time frame. After this resistance, this high, trace broke. You can see we tested into it before a continuation. And sometimes, like I said, after making a couple of highs, you can see it might just make massive sell, came back all the way here, started the journey again. Now it has broken above this level. It didn't come back here, or it hasn't come back here yet, which means there's still a tendency in future price might come back here. So, but I'm working with what I have currently, which is, so you can see these lows, it created these lows, which we can be buying from. Now, it also did this high. Good, which we can be buying from. All right, so if I go to my current market price, even though, okay, I didn't tell us the overall direction. You can clearly see the overall direction. You can clearly see it. You can clearly see the overall direction. So what's the overall direction on silver? Or our current direction? Still the overall direction, right? What's the current momentum on silver, up or down? I need your responses. I'm asking the question now. Bullish, okay? Someone says bullish. Yes, I need more responses. What's the current trend, up or down on silver, up or down? Okay, let's see. Someone said overall bullish, okay? Angel, yep, you're right. Says up, Sanusi, yep. Who else? Okay, my friend is Felix. Up, you're right. Okay, yeah, up, up. All right, you are very right. Cyril, oh, you dropped your hand. Sorry, I wanted to unmute you to speak. Okay, up. All right, but it's retracing. Okay, look at that. All right, Cyril, yes, you can unmute and ask your question or give your contribution. Oji Cyril, please go ahead. Okay, I'll take it as it was a mistake. There is of hand, so let's continue. All right, so yes, remember I said price is moving from one point to the other. Now, for the fact that this level has been broken, okay, it retested it. Now it's like magnet. Price needs to go up. So this is how it works. The moment price broke this level, let me go to my 1 hour time frame. Let's look at where that break happened. Where the break happened first. Good. So this was where the break happened first. After going. Now, we know that price is bullish, which means it should be going to the upside. But I also know that for price to go up, that means for it to buy. Going up means you're buying. You need sellers to come into the market for price to buy. For you to buy whatever product they have to sell. If you want to buy but there are no sellers, then you can't buy. Which means price wants to go up, it wants to buy. You need sellers, which means you need down. You need price to come down. So I know that for this upward movement to continue, price has to come down into this point. So when I see that downward movement starting to happen, I know that for this thing to be complete, it has to come here. All right. Now, it does not always mean 100% here. If after a reasonable sell and I see a shift in momentum, so you need to understand where shift in momentum happens. Unfortunately, there's not enough time for me to teach you how to recognize shift. All right. There's not enough time for me to teach you how to do this. I call it fractal. Some persons here would have had me mention fractal a lot. So you see price came into this level, it didn't get there, but there was a shift, which means it went up, which means potentially price can still get here. Don't write it off. All right. Once it gets here and we respect, then we can now have that big momentum push. So you can see it pushed up. That's why I always mark the last high from where it was dropping from. At least you get here. Now it pushed down. Now it got here. Looked like it was breaking. Why would I not keep selling? Because from my higher time frame, the daily, I am bullish. So this will just be a fake out. So if you want to take this support here as a resistance to keep selling, that is where you'll be wrong. Right? Then price started going to the upside, to the upside, to the upside, to the upside. It came back here again, started going to the upside, to the upside. Now, what is price trying to do? What is price trying to do? I need your response to make me, to see if you are following or you are even getting to understand what I'm talking about. From here, what do you think should happen? From here, should price keep going up or should it come down? What do you think is most likely going to happen? Or what do you think is going to be the best thing that should happen? Cyril, your hand is up again. Looking for sellers to keep going up. Okay, yeah, that's one way to put it. Cyril, okay, let me unmute you again so you can, yes, unmute now and make your contribution. Okay, someone said come down, Felix, all right? Okay. I don't think Cyril is ready. Ayo Emmanuel, you can unmute and make a contribution.
Yes, at this level, I expect it to still come down before going up.
Okay. 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 So yes, you are right. One more person. Let me see. It will sell first. Yes. So now you're understanding what I'm saying. Now, it doesn't mean that I can't just see buy. It can happen, but that's not the best thing that should happen. That's not the order. Maybe a fundamental or something. Price should retrace the current resistance and continue going up. So for me to have a good trade, I need price to retrace. Now remember the principle, for there to be a buy, there should be a sell first, right? Good. So I can have, so is either you do it this way, or you take the whole of the sell first before the buy. So this area is going to be a hot spot, right? That's one. And overall, the best of buys is going to happen if price can come back all the way into this hour zone here, into this hour zone. Once it does, then you see that shift in momentum. That is the perfect trade that you like. And the advantage is that you are going to maximize profitability for a while. Like you can see the last time it tapped into this point here, for how many days price kept going up? One, because how massive it went up one day. The following day, retraced to be continued. Two, for 3 days straight, price was just massively bullish. Okay, so this is what we want. You wouldn't stay too long before you are in profit. And when you're in profit, the momentum is there to push price in your favor. So this is one. Anywhere here, right? Or alternatively, it can extend to this level. So if it gets here, you will make the most money if you swing it. All right. Or I can keep buying it for days. If it gets here, it can go for like a day or two before it gets here. But if it gets here, it can go for at least 3 days or more before it gets up here. So it depends on what price does. All right. So that is for silver. For our dearly beloved precious metal, gold. All right, so the same principle. So this is where it makes more sense to buy from. This is the last high, significant retracement. This is where it makes more sense to buy from. So this is where we have been dealing. This is like, let's say my dealing range. This is where I'm ready to deal. I'm ready to buy if you can. If price comes as cheap as this point, this is where I'm ready to buy. But you also note that the last time price came here, it hasn't come back here again. This is where price is currently hanging now, right? This level. Now, which means that price can keep buying off of this level. It can keep buying off of this level. But I wouldn't be shocked if I see an aggressive sell, gold, that aggressive sell that will bring us back into this level. So from here, we will be buying it for days, just like it happened around here. It will be going on for days. So I won't be shocked to see that. So this is how it looks like on my 1 hour time frame. On my 1 hour time frame, let me see. This is the first level that we are looking out to be buying from here. The condition is once it gets here, I need to see that shift in momentum to confirm my buy. So I can buy for a day or two, if possible, 3. But if it can go as low as this level down here, where's that level? I can only see it clearly on my daily. Then I can be buying for like a week or two if the shift happens around here. Okay, so that's for gold. So we have US 30. the same principle that we follow. So when it comes to indices, we're not just going to be measuring on one zone. We can have like two zones that will work with. And you should be, so for instance, if I'm doing with indices, I will always like to have my stop loss. I didn't mention stop loss with the currencies, even with gold. Yes, it's good to have your stop loss, but with indices, it can be crazy sometimes. So you need to have your stop loss in place because sometimes that retracement can be massive, even though it will end up going in your direction. It will go deep first, like very fast, and come out very fast. But by then, if you have stop loss, it probably might take you out stop loss. Or if you don't have stop loss, the drawdown will be so massive, like you find yourself in huge negative, okay, in huge negative before it eventually goes. So that's why I'm not using my weekly time frame for this one, not my daily. So you can see the whole of these highs where I have massive retracements. So if I mark this high, extend it to the future, you will see where we now had a trade. So it took a long time, but price finally got into this point. So from here, this is where you'll be buying it a lot and be buying it up until it gets at least here. The last high it created before the sell happened that brought us here. So you notice that it went back all the way and got us back there. Now, for the first time, it has taken out this level. It has taken out this level. Let me see if it's clear on my daily. So you can see all these highs, all these highs, all these highs. So it has taken it out. We just need a retracement into it to keep buying. So you can see after taking it out, a retracement into this level, not perfect, and going up. So which means that this is where I'm going to be dealing. It should have a short retracement before a further buy to the upside. So I expect in the long run, this retracement is just going to be short, but in the long run, you should keep buying. Yes, Eddie, please, you can unmute and make a contribution or ask a question. So please go ahead.
Good morning. Yeah, good morning.
Good morning, sir.
Yes, sir. Please, I've been seeing your analysis since, against the dollar pairs like GBP USD, USD CHF. So
Yes, sir.
you are favoring most of those pairs against the dollar. But sir, I've not traded for long ago. I just started late last year. But I did a little bit of research in dollars. I found out that anytime a president of America is being elected newly, within a space of dollar will be bearish. You understand? Because of the new policies that each of them, bring in. So after that 1 year, maybe some 8 months, dollar will start going up again. So I think why dollar will down is because of this same policy that Donald Trump is bringing up. You understand? So I don't know, because Donald Trump is going to 1 year now. So I'm thinking maybe is it time for dollar to be bullish again? So that's what I'm asking, because I asked the question last week that what moved this market mostly? Is it fundamentals or technical? So that's why I want to ask, sir. Thank you, sir.
All right, you're welcome. So let me attend the question before we attend to Cocoa D and the like. So that is what we call situational analysis. Situational analysis. We can't call it technical. It's not. It's situational analysis. Let me just put it out. Right. Technical analysis is what you see on the chart. Based on chart movements, you draw inference on that. So it can happen that way, but like you said, is it time for dollar to become strong? We don't know. Nobody knows. So two things move the market. We have the supply demand, which is constant. People always buy, always sell. And the other thing that moves the market is fundamental. Fundamentals are not constant. They are variables, which means they come once in a while. So what it does is that few minutes, few hours, few days that the fundamental will hold, it will inject a lot of money into the market. And that money is what will now fuel the next movement, either for buys or for sales. Fundamentals are needed. they are needed. Fundamentals will make big investors to come and pump the billions and the trillions of dollars into the market, right? So that retail traders like you and I, with our few hundreds of dollars, few thousands of dollars, would be seeing some liquidity in the market. We need money, like I established. We need money. Money serves as that liquidity, like the fuel for price to move from where it is to where it needs to go to. Okay, so but what moves the market consistently is supply demand. So if we don't have news for today, is price not going to move? It's going to move. Supply demand. People will still buy, will still sell, obviously. But if we have news, what will happen is we'll experience massive movements in a short period of time. And that massive movement, for instance, there's a lot of money pumped into this market that pushed price to the upside all of a sudden. So, but we need a retracement for price to continue. So, which means most likely in the long run, we expect price to keep pushing to the upside. And price has stored around this resistance level for a long time. For a long time. So for the first time, price is breaking out of this level. And fundamental was what helped it. You can see this massive, aggressive push, okay? So I'm not drawing inference from that. It's good that you understand that whenever a US president is elected for the first few months or within max a year, the dollar is down due to changes in policies. Investors don't have confidence. Investors are unsure if the new president policy is going to favor their own business. So some people will take some of their money out of the economy first, so to absorb shock. Yes, and Donald Trump is a very controversial person, as we see. So yes, that has happened. So is it time for dollar to become strong? I cannot say. I only follow what I see on the chart, sir. All right. So which I will advise you to do also. Right. So yeah, D. Let's go to DE. Hope I'm not past D. Okay. Let's say DE40. Before we do Coco, right? So Mr. Sanusi, let's look at D first. All right. So we were saying that. Okay, let's do the same analysis we do. But remember, said, okay. Yeah, we did this at our indices trade vault yesterday. We did this at indices trade vault. So we said we need price to come down into these levels before we can now have our buys. So this is my daily. You can see this previous high, massive retracement, finally broken, is retesting off of this point here. So if price cannot go above this region at the moment, then it needs to come down to peak liquidity because the overall direction is up. The overall trend is up. Okay? The overall trend is up. So we are favoring the buys than the sell. So how does it look like on our 1 hour time frame? You can see that for the whole of yesterday, price still struggled, and you can see it's trying to push to the downside. So how do I sell? You should be able to sell from, you see previous lows that have been broken, all of these lows here. You can be selling from here. This is this low, this low, this low. When it broke, retrace and continue selling. So this is where your sell, retrace and continue selling becomes valid because price needs to come into this point here. Price needs to come lower. All right. Let me see. Price needs to come lower to this point before we can keep selling. Or if it doesn't come here, so where it might stop can be at, you see this last highs that we had, this retracement right here, price can stop right here. So if it doesn't stop here, the only condition for which I'll be buying, is if price can break above this level and it retests and it holds, then yes, I'll join the buys all the way back to this high point. That's one. But for us to have the best of trade, price needs to break all of these levels and come into this point here. Right? The best of trade should be around here. So once it gets here, possibly for days, I am going to be buying D all the way up to this level. All right, so that is the current analysis on that. So let's look at Cocoa. Cocoa also pushing down massively, but you can see that the trend is still looking bullish. So this is the lowest point it has created. This is our dealing range, right? These are current dealing range. And so price, all of this sell downward push is maybe to come into this level so that it can keep pushing to the upside, right? So if you're on a buy, there's still a very high tendency that price can still push further down, right? There's still a very high tendency that price can still push further down. But our structure has been broken around this level, so it might not get there. Why did I say it has been broken? This was the last high that price printed before the last high points printed. Let me be specific right here, because this was the high that broke that low. So price has finally taken it out. So we needed a retracement because of the massive push. We need a retracement to keep pushing us over. So this is my protected low. I'm suspecting that price will get here before reversing again, which is very, very close to this my point of interest. So it's not going to take long before price turns up. And when price turns back to the upside, it's actually going to go for a long time. It's going to buy for a long time, right? It's going to buy for a long time because of our trend, right? Because of our trend. Yes, so so let's see. How do you understand the breaking structure for movements? I usually see liquidity sweep. Okay. That's going to take us a while. Unfortunately, might not be able to do it right here, but you can, and I'm not sure where. Yeah, you're most welcome, sir. I'm not sure when, but maybe you can just reach out and I can send you 1 or 2 videos on it, right? Okay. So I think this is where we'll end our review for today. I hope this was very helpful. And beyond just, oh, we are looking at being bullish or bearish, you're understanding how to do proper analysis and take some trades. Disclaimer, there are more to all of these things I've just told you. Like I said, we couldn't go much into the structure, into fractal, shifting momentum. We couldn't go much into it. I was just mentioning as we are passing. So if you are applying based on what I showed you now, yes, it will work. But sometimes you'll experience some drawdown before you actually get out of the negative, or you still end up in profits. But if you understand more, your drawdown might not be much. Okay. Um, okay. Let me take this down. So any other question before we go? I have less than a minute. Less than a minute. All right. Okay, so thank you very much for your time. I'm seeing some persons dropping some stuff here. Okay, it's 00265824993. 00265824993. Yes, for those asking for my contact. Yes, that's it. All right. Oh, Mr. Carl, unfortunately, we don't have time to go into that. I've done GBP US. So you can head over to YouTube, check this video again. This video is currently live streaming on YouTube and it's going to be there. So you can go to YouTube, type Rally Trade, and you see the live video that we just did, this one. So you can watch it again and understand the concept we just did. Abdul Ghani show, well, I'm so sorry, might not take more questions, but let me just call my contact one more time. Please, you can reach out, or you can reach out to your account manager and they'll get you for me. They'll get me for you, all right? So 00265 82493. 00265 82493. And the name is Victor, all right? Yes. So thank you so much. Right. Enjoy the rest of your day and wishing you a very, very profitable day.